Tesla reports earnings today, January 24, after the market closes. So that's in less than 2 hours from now. So in this video, we will be analyzing 3 sets of unusual options activity data from today, yesterday, and the day before yesterday to base our trade on Tesla for earnings. Before we get into the data analysis, take a look at the charts here. We are currently oversold on the RSI indicator for Tesla. And if you recall previously, Tesla dropped for earnings last time and actually fell to oversold status after earnings. So this time we will be going into earnings while oversold, whereas the previous was not. So something to take into account if you use technical analysis. But if you've been following this channel, you know that our data analysis of unusual options activity is a lot more predictive because this is based on what the wealthy investors are trading. And so without further ado, let's get to the data analysis as usual. So for today's data, now there could be additional data at the last hour because currently it is only 2:26 p.m. But as of now, what we see is these 6,000 unusual options here, and also these 3,000 here. Okay, they're all for the same strikes, 200 calls, 200 puts, but a different expiration cycle. Okay, so let's take a look at both of these. For the February 16, 200 strike calls and puts. We can see here there's an open interest of 33,000 on the put side and 8,372 on the call side. So these could be closing trades and not necessarily opening trades. If they were opening trades, we believe they were selling the 200 strike puts and buying the 200 strike calls. And this would be a long synthetic strategy, which is a positive 100 delta per trade. Okay, so this is a bullish long trade. And since they had sold 200 strike puts, essentially saying they're willing to own 100 shares of Tesla, that's 20,000 per contract. There was 6,000 contracts. This would have been a $120 million trade. Okay, so let's move on to the March 15th, the 3,000 contracts at the 200 strike calls. Again, we have open interest much greater than the volume. So these again could be closing trades. And this would be the same type of trade where this is a long synthetic if it was an opening trade. Okay. And so that is something to keep in mind. All right. When we take a look at yesterday's data for the 23rd, we have a set of data that is a lot more clear where we know these are opening trades for the December 2024s. Now this is 332 days away. Now you can see here at the 185 strike puts, there was a volume of 2,000. That's much greater than the open interest. So we know these are opening trades at the 185. And then what they did was they also traded the 300 strike calls here. 2,000 contracts. Opening trade, since that's greater than the open interest of 612. So what did they do? So we believe that for these December 2024s, they had sold the 185 strike puts and bought the 300 strike calls. And when you analyze this trade, you can see that this is a long bullish trade, because you can see that as the price of Tesla goes up, this is profitable. If it goes down, it is a loss, a negative here, okay? The x-axis here represents the share price of Tesla, currently trading at 208, okay? And the 0 here is the profit loss diagram. Any time the blue or purple lines are below this is a loss. Anytime it is above, it is a profit gain. Okay, so the third set of data that was the day before yesterday, on January 22, this was all the way here at February 16, so just 25 days away, where this wealthy investor was buying the 220 strike calls. Now, even though you can see that it says 15,000 here and 15,000 here, we were able to confirm that these were not closing trades, and that they were, in fact, buying these call options for about $725 each. Okay, so that is clearly a bullish trade, since when you buy call options to open, they are long bullish trades. So based on a lot of this data, we will obviously be going long. And the way we are trading Tesla, we're going to pick the January 26th, expires in just 2 days. Since this is just a very quick earnings trade. And so for each of our trades, what we did was, you can see here, we traded 3 options. These are our positions for these strike prices. And what we did was we sold the 230 strike price calls, 2 of them for each trade, and we bought the 232.5 calls and the 225 strike calls. And here is the trade. This is a broken wing butterfly trade. Each trade costs just $49. So we can position size based on how much risk tolerance we want to take on. And you can see here that because it costs $49, that's our max loss per trade if Tesla were to go down. If it goes up, you can see that we could potentially make $200, which is a risk-to-reward ratio of 1 to 4, 400%. This is a risky trade, though, because the probability of that happening is quite low. You can see that if we move the bar here to about February 26, you can see that this analysis here actually calculates the probabilities for it to go anywhere from here above is actually a very low percentage, 1.13%. So keep that in mind. This is not a very high probability of profit trade. Okay, so that's why when we trade earnings, we do not position size very much. Okay, we can decide how much we want simply by choosing how much contracts. For example, if we wanted to risk $500, for example, then we would do 10 trades here. You can see this is about $500 of risk. Potentially could make $2,000 here with this type of risk to reward ratio here. Okay, so that's something to keep in mind, that these are not high probability of profit trades, but because of earnings, sometimes these probabilities, even though it says 1%, could actually be a lot higher, because earnings is sometimes close to a 50-50 chance of either it goes up or either goes down. But based on this model, that's what it's telling us. But because of earnings and our data analysis of what the wealthy investors are doing, we want to skew to the long side. And if you are interested in the higher probability of profit trades, though, make sure to go to our website. We will put a link over here where we use this type of analysis and share it with our members only to pick the best stocks in the market that the wealthy investors are trading, so we can beat the market consistently and have that edge. Okay, let us know in the comments below what you think will happen to Tesla. And as usual, please smash the like button, subscribe if you haven't, hit the bell icon, and you will be notified of future unusual option activity. Take care and good luck.